I think you can create your business. That's a great thing about business, right? You create your business how you want to create it.
Exactly. And that's something that I'm trying to learn rather than, hey, hit these goals of assets under management or sales or income. It's like, well, hold on. Well, there's other things with that as well. Welcome to this episode of the Captain Kurt Show.
Think you have to be rich to invest in real estate? You don't.
All right, welcome to the Captain Kurt Show. I'm here with a friend and a house flipper. He's got a great story, Josh Giordani, and we're here to just chat some entrepreneurship. He's also from Carlsbad, so happy to have you on. Thanks for coming.
Thanks, brother. Appreciate it. Thanks for having
man.
me.
So we met. I've been following you on Instagram probably for a year. It's like how people meet these days, right? And you put out some great content, and I really liked your personality and. It was fun. We got to have lunch, whatever it was, 6 months ago, and just connect for no real reason, right? I like connecting with local people doing business because you never know what you can learn from somebody.
Absolutely, 100%.
So let's go back to how you get started in real estate. I know some of your story, but I think it's interesting how you progress so quickly.
Sure. So I got into real estate 2009. I was a realtor first. 2009, by the way, I think I was 18, 19 years old. So got my real estate license. I sold real estate up until 2017. When I was a realtor, I listed a lot of stuff, REOs, foreclosures. I did a lot of short sale negotiating. And then that transitioned into me representing a lot of investors who wanted to purchase those. So started working with hedge funds and big investment companies to buy and hold rentals or buy and flip. So I started learning their process a little bit. So that was kind of my first entry into the investment world. 2017, I was looking for a change. I got recruited into title insurance, corporate jobs, still in real estate, which I was at up until April of last year. I was flipping houses for the last 4 years, so since 2022, basically pre-COVID, as a side hustle. I was just a silent partner. Realtors were referring me deals. We'd close on them, flip them, stacked up a bunch of cash. And I decided at the end of 2023 to start doing my own deals. And then it kind of blew up into what it is today. Last year, I did 67 deals, my first full year as a flipper wholesaler. And then this year on pace to do 120. So last year, multiple seven figures first year. This year on pace to do, close to 4 to 5, something like that.
Wow.
In a 2-year span.
Yeah. So you were working full time 2017 as a title insurance agent, and then you started flipping homes on the side. So I think a lot of people don't realize where they're like, oh, I don't have enough time in the day because I work 8 to 5, 9 to 5, whatever. But people that have more drive and want more are willing to sacrifice going to the bar at night, going to the restaurant with your friends because you have a side hustle, whether it's pre-work or after work.
So the great thing is when I was doing it as a side hustle, the partner who was doing it did it full time. So he already had his process all set up. So all I needed to do was find the deal. I've been in sales for a long time. I was building relationships with realtors. All I was doing was going to the realtors and saying, hey, if you have an off-market property that needs work, I'm willing to buy it. So I would partner with him. He would do all the management, all the construction. We would just invest 50-50 and we'd split profits 50-50. And so I did that for a long time. And it was probably somewhere around 20 deals for 2.5 years that we did together. And that's kind of how I got my feet wet into doing it.
I love it. And I think it sounds like you had a great partner because you guys had two different skills. So you were bringing in through your network of over 10 years, bringing in the deals, and he was managing the flips and designing them, things like that. Is that kind of how your partnership worked?
Yeah. So, and he's a big flipper in the market. Him and I are still super close friends to this day. We had a great partnership. I was the one that found the deal. He was the one who did all the construction and management because he already had that infrastructure, kind of like what I have today. Like my business now today, I have the infrastructure, I have the management, I have those things. But back then, doing a side hustle, still having a full-time job, like I'm not going to drive the property. I'm not going to go check in on construction. I didn't want to do any of those things. And that wasn't a strong suit because I didn't know what to do. Mm-hmm. So, I took that knowledge and I learned, and I'm so grateful for that opportunity. And then now I was able to build what I built today. I do have a different business model and different things just because I've learned over time that like we're all different people. We all have different strengths and weaknesses. So I just took my strengths, which was sales and marketing, and implemented it into what I have today.
Yeah, I think it's really cool. And so your market and primary focus is San Diego County, right? Are there markets that you like more than others right now? No, not outside, sorry, within San Diego, are there certain areas that you target where you'll either wholesale some off? And for the listeners that don't know really what wholesale is, you'll do deals that you'll buy an off-market deal and maybe you'll sell it to a flipper and you just take a small spread, but you're in and out real quick. Yeah. But then you'll hold the good ones, I'm assuming, and flip the good ones that you want with a larger profit, or the ones that you like at least.
It actually depends. So like right now with my rule with wholesaling or flipping, I am predominantly like I flip all of the realtor deals, the people who bring me deals, because I want to be able to provide them the listing. So I still want to keep that relationship. But we do so much direct to consumer marketing that because we're kind of a volume play, right? Like February, I think we had 17 new deals. So I don't want to buy 17 new deals, especially when there's, Spring Valley, El Cajon, Chula Vista, all these different areas that I don't want to be spread too thin in different areas. So I do pick and choose, but the flips that I do take on, sometimes they're not bigger margin. Sometimes it's just like, let's say I get an offer for a $15,000 assignment fee, but to flip it, I'll make 60, right? Like to me, I'd rather do the flip than do the assignment. But it also depends on risk and cash and all these different things, because I do have a big overhead within my monthly nut of my marketing spend. So, wholesaling is quicker cash, quick turnaround time, where flipping is a little bit more, long dated, 90 to 120 days.
Yeah, and with wholesaling, you're not really buying the property, you're selling the contract, so you're less out of pocket. You throw EMD down.
Most times I don't need to throw EMD down. Okay. I assign them so quickly. I run a really lean, we talked about it before this, like a really lean team. It's me and I have an acquisition manager. We are hiring right now, but I've only had, let's call it 3 employees at one point in time. And so there's things that she does on her side, and then I do wear a lot of hats in the business, especially because I started this thing up 2 years ago. I spent a lot of cash. I risked a lot of money in the beginning to test different marketing channels and test different things that I wanted to recoup my investment and be extremely profitable before I scaled further from an employee standpoint and not a marketing perspective. So, I'm finally at the point where now I'm scaling employees from an employee standpoint, because we've done a lot of testing. So, yeah.
And I think it's good that you had knowledge in every area of the business throughout your career in flipping. You have to have the experience to be able to train new employees and staff in creating the vision, right? So your process is there now. And so you're like, okay, well, I can implement a little bit more.
So it's interesting you say that, because I actually didn't know how to wholesale until March of last year. I did my first wholesale by myself. So I'd never even had an assignment contract. I didn't even know like how a wholesale worked, what it was. I didn't know what a double close was. There's a lot of things that I didn't know. I also didn't buy my first flip until the end of 2023. So all of the process of the acquisition side from buying it using hard money, getting private money, and then also assigning deals, I actually didn't know how to do any of that. So I taught myself how to do all that. But what I did was I brought in people who did know how, and I paid them a split. And so in the beginning, I was paying a $5,000 finder's fee for someone to assign my deals for me. And, now I know how to do all that stuff.
Yeah, and I think it's good. I think, some things you got to teach yourself. There are some good mentors out there, not all of them, right? Some are in it for just the money. But is there a mentor at all besides you teaching yourself? Is there like a YouTube channel that you learned from, or any course, or did you just wing it and met other flippers and wholesalers?
So at the end of 2023, I signed up for a big coaching program, and I've been a part of that coaching program for a long time. I've not gotten out of it. I think as you grow a business, there's always things that you're going to need to lean on someone for advice and questions, and what's happening in the market with constant market fluctuations and changes that we've dealt with for the last couple of years. So yeah, absolutely, having a mentor, having coaches is extremely important.
Yeah, and at least I've done so many different asset classes in real estate, and for me, flipping wasn't my answer, but we were also flipping out of state, right? And I would always kind of find a mentor or free YouTube advice, or I actually listen to a ton of podcasts. You can learn a lot from certain podcasts, right? And even though I never had that full business coach, because I went from flipping homes to 4-unit complexes to mobile home parks, I kept switching to the people that I would listen to, right? And I finally just now joined a mastermind, paying $20,000 a year is the cheapest one, but I picked a certain mastermind that would help me for specifically what I'm doing. And really, there's so many out there to choose from, but for what I do, which is industrial development now, even though there's a development wing in this mastermind, but it's really business tactics focus, and that's what I needed. And it was there's so many people out there, it's you really have to watch a lot of their stuff to get the credibility. You don't just watch one video on an ad or whatever if they have it. You really want to dig deep. And when you pick a mentor, for any listeners out there, and it's cool to hear that you say you joined a community and you're still in it, because they're obviously providing value for you to continue to pay to be in it.
Yeah. I think the biggest thing that I started with, because as you just kind of said, I was so hyper focused on what I wanted to do and how I wanted to do it. I wasn't distracted from, there's a lot of masterminds that you can go into, and they do talk about different business models, and someone doing this in Ohio or this in Texas and this in Arizona. And I think when we were at lunch, you asked me about creative financing, buying rentals, and these other things. And my lane, and the reason why I was able to go as big as I did so quickly, was because I've only focused on two things: wholesaling and flipping. And I stayed extremely hyper-focused in the group that I'm a part of, and did not let anything else distract me. And I focused on the marketing channels that were the most productive, that most people were doing within the community, so that I knew that if I continued, the results would follow. And so a lot of those things, now I do want to get into some other masterminds that are higher level business with like-minded people. But I know now that I am mentally mature enough not to be distracted by other things that people may talk about or pitch and things like that.
Yeah, and I think that's something to be said, because I'll tell you right now, I was one of those people that was distracted, not by money, but by, there's so many ways to make money in real estate. And I was one of those people that went down that lane. Okay, cool. I bought a duplex. Okay, I flipped a couple houses and was successful. Then I had one flip that didn't go well because some homeless guy burned it down. But then it was I want to scale. So instead of focusing on scaling flipping, because my phone at least was nonstop contractor questions, and I was doing it out of state because literally I just kind of couldn't afford it. Didn't have enough capital to be flipping in California or the knowledge, right? Flipping out of state is really hard unless you have a partner that's on site, which we didn't have. So, but I was one of those people that was easily distracted. But now, after 10 years in the business, but really 5 full-time going hard, now I'm in my lane that I want to be in, and now there's no distraction. And that is, for me, is when I joined a mastermind, paid good money, not a cheap course, and I'm connected with very high-level people, and I think it's going to pay off very well. It's already creating my vision and everything else, so it's great to be surrounded by like-minded people. And at least with this mastermind, it's great because there's a flipping group, so you all get together. We have Zoom calls, but in the quarterly meetings, everybody gets together, some motivational talk, business tactics, state of the economy, all that stuff is good for everybody in real estate. But then it's the flippers go this way, the mobile home and RV parks go that way, developers go this way. For me, I don't need to be in the flipping room because I've decided that's not for me. I want to be in the development room. And it's funny because even though I'm a new developer, these people are doing big things in that room. But what's cool about it is they go, hey, you bring a lot of value. You're a people person. I'm really good at marketing, really good with relationships. And some of these other people are really good at developing. They're not as good at marketing and things. So it's cool that I can provide a value too, and you give and then they give too. So it's really cool to be a part of that. But
is it
yeah, the boardroom with Kent Clothier. So I had a strategy meeting with him too as part of your onboarding. I recorded it, and it was phenomenal. So Yeah, I have nothing but good things to say so far. I'm going to my first in-person quarterly meeting. They would do monthly Zoom calls for accountability. And even though I haven't been to a quarterly meeting, they're like, hey, so what's going on in your business? And I was like, yep, I'm doing exactly what Kent kind of laid out. And it's cool because there's accountability. So it's not you go to these quarterly meetings and these people critique you. You get 30 minutes up in front of the room. They critique you, but really they critique you on, hey, I'm having these issues in my business. These are the problems. Like right now I'm having some funding and bank problems. Banks are tightening up. That's what's going on, at least for development. So they went from an 80% LTV or loan to cost for building, and now it's 70. Well, I already had a project underwritten at 80. That's the money we raised for it. The 99 yard line, they denied the loan. And they switched. They're like, you need like 500,000 more in equity. And I'm like, this is it. But what happens is because of that, you can't just go raise 500 grand. It dilutes investors. Now the returns don't look as good. Right. So I've had to solve that, in which we are solving for it, but it's been like a 4-week delay. Right. And so it's good to have other people that have had this experience, or in the boardroom, my broker is the one that's helping me get through it. Sure. He's like, well, hey, if you do it this way and you save the landscaping and the sale and the big $50,000 sign, you can do that after you sell some of these units, and it doesn't need to be a part of the loan. It's like, oh, we're getting creative. Mm-hmm. So it's interesting when you're in a room like that.
Yeah, because there's always solutions. Someone's gone through the problem that you've already gone through.
Yeah. And for me as a new developer, I'm like, okay, cool. I'm relying on a 20-year builder. My builder's doing industrial buildings for 20 years. Mm-hmm. It's not Curtis going out there going, hey, I'm a new builder. It's like, hold on, I got 10 years in real estate. I've got a lot of different things going on. I have a good team. But the finance thing, you don't always have control over.
100%.
You know? So,
yeah, that's important.
And so right now, do you use hard money still, or are you mostly using cash funds?
So a mixture of both. I have 100% private, and then I do use hard money as well. But yeah, it just depends. But I don't use any of my own cash for any of my flips that I have. The only thing that I pay for is like monthly interest and things like that. But other than that, no.
So kind of cash reserves to pay the interest on the loan. So let's talk about what is the difference for listeners what is the difference between private money and hard money?
I mean, there's no red tape, right? Like with hard money, you're going through an institution to lend the money to you. With private, let's say you loan me $600,000, right? A little bit different. Like you're just recorded on title. I get the 600 grand to buy the property, fix it up, and put it back up for sale. So a little bit different in terms of like costs. Private money is probably a little bit more expensive, but it just depends on what your appetite is. With my private money lender, I don't have to pay the monthly interest, and I also get a check at closing. So like, we had one that I bought a couple months ago, $485. We needed $150K in rehab, so I got a check for $150K at closing. So to do the rehab, we ended up not putting any money into it, and I ended up selling it for $650. So technically, I made $150, but. Yeah, and I agree. So when I first started into flipping, I was just straight hard money, and it's kind of a deeper dive where I think private money could be an individual, could be a friend of a friend, or just a private money bank. Like you said, they even have that in industrial development stuff. You pay a little bit more money, but there's less red tape. Maybe they're not going to care as much of how much cash do you have in the bank when they have an amount, but then the institution, they're loaning people's money, so they have it's much more red tape in my opinion. Yeah, I don't feel that, once you built it, because I think we're all in a relationship business. So I've built a solid relationship with my hard money guy. Like if we needed to close in 2 days, we're closing in 2 days. Like, and there's no questions with I don't have any issues with anything. So for newer investors that maybe don't have a bunch of liquidity or assets, sure, there's going to be a little bit more red tape. You're going to pay probably a little bit more in points. There's probably going to be a little bit more money down. But as you grow and scale, I would probably at this point prefer hard money over private money unless I got really cheap private.
And that's you hit the nail on the head. This is a relationship business, and a lot of people don't understand that. If you treat it as a transactional business, you're not necessarily, you might be building experience, but I think for me, my specialty is building a relationship, but you have to earn that trust and perform. And now all of a sudden the red tape starts going away. The speed, the quickness starts picking up and things like that. For me, being a new developer, we're leveraging my GC and my broker's relationships with the bank, it helps, but they're like, yeah, but you guys are controlling the money, you're still new. And literally they're like, after you do your first one, the second one will be easier. Third one will get better. And then maybe my rates get better as well. So what are some of the relationships you've had in this business besides like your first partner that you had? And it sounds like you've got your own business now. What do you think are some key relationships for listeners if they want to get into wholesaling or flipping homes?
Ooh, there's a lot. I think a lot of people get into, man, there's a ton. I mean, like, because you need everything, right? You need a real estate, you need a realtor relationship, you need an escrow relationship, you need a lender, having a private money contact. I think having a mentor is extremely important. Someone who's been there, done that, right? Like, who's done the thing that you want to accomplish, I think is really important. So over time, it's taken a lot of time. For me, it was a shortcut because I was already kind of in the industry. But I have met a ton of like my private money lenders who I now work with. I've met over the last 2 years. My hard money lender, I've met, last year and a half. And we've built a huge relationship. So I think over time, you're just going to naturally find those people, especially when you try to get into rooms, when you're trying to break into the wholesaling and flipping game. When you start talking about things, somehow those people just start coming into your life when you're kind of, through osmosis and things like that. So, yeah.
Yeah. And I agree with you. And I think you start with a relationship, you get a hard money lender, and some of them all of a sudden go out of business or they're out of funds. And then now you got a couple deals going, oh crap, I need to find somebody else. So I think it's networking, I think, is also a pretty big component of being successful in real estate and having people you could call on. Like you said, even though mentorship is one, but I think having a network, right, and creating your own brand that you know what you're doing and you do what you say is really important. I think there's plenty of people in this industry that just kind of do it for money only. And it's like, there's not really a relationship there if it's just transactional.
Yeah. Well, I mean, everyone who's lending private, we're all here for money too, right? But there's a lot of times where I will walk away from money for a better, stronger relationship. For example, like one of my private money lenders, I literally had two houses like right next door to each other. And I just, instead of wholesaling the house for $35K, I gave it to him. And he's giving me a hookup on a loan that I'm getting. So it's like, you kind of give and take a little bit. Was it probably the same trade-off? Maybe, maybe not. But like, to me, at the end of the day, like, I was fine with that. So, yeah.
And I think that says a lot about your character too, though, right? We all want to make money. That's why we're entrepreneurs and why we're in real estate. But I think if you have strong relationships like that, longer term, they will continue to pay back. And I think you can go to bed and sleep at night and feel really good about yourself because it is somewhat of a team team business,
sport.
Team sport. Yeah,
Yeah.
I call it sport. So if you love it like us, it's kind of a sport.
It is.
I mean, we're kind of addictive entrepreneurs where, I fly private jets on the side, which is my day job. And then it's like on my days off, I'm in this office at 6 a.m. all the way till nighttime and it's time to go home for the family for dinner. But eventually it'll pay off and, I'll be able to remove my day job. But it's not like I'm retiring. I'll be sitting in this office doing deals, meeting people like you.
100%.
It's just I think entrepreneurs have a different mindset.
Yeah.
And we like to work.
Yeah, 100%. And I do think that at some point, like, there's levels to the different sides of things, kind of like what we were alluding to as entrepreneurs. Like right now, I think I was actually going to make a point when you were talking about entrepreneurs. We all, like, as an entrepreneur, you think that you have to put your hands in all these different things. And once you identify the one thing that makes you a lot of money, eventually when you get out of that, like for me, do I want to start going into multifamily at some point to flip some bigger stuff? Yes, of course, right? Bigger paydays, less volume, right? Where I can do one of those a year and maybe make a 7-figure payout, right? Do I want to start lending private money? Of course, right? Because I look at these guys who lend me private money and I'm like, man, I paid them out $350K last year, right? And they're sitting at home or sitting in the Bahamas drinking a margarita. I'm like, I would love to be able to do that one day. So as an entrepreneur, it's just, there's levels to it. And eventually just kind of stepping stones up to the different levels.
Yeah. And like you said, it's maybe time in your business, time in your life where life changes, your kids get older or whatnot. Like for me, I want to sit in the Bahamas on a boat. Like my coach said, what is your vision? And I went, well, vision's $10 million, but I'm not chasing the money. I don't need Ferraris. I don't need that stuff's cool. But for me, I'm like, my vision is sitting on a boat in the Bahamas with my family, period. So like, great. How do we get there? Let's build the roadmap. Even though you have all this experience, let's build an actual tactical roadmap. And that's literally what I'm doing right now.
Yeah, I love that.
And, and for me, it's good because as a CEO and a visionary, my hat's in my hands in every little different aspect. And he's like, no, that's not how you run a business. Yes, I understand. We're all visionaries. We need to delegate and put the right people in the right seat. And even my CFO is like, dude, you need to focus on education, dealing with investors, like be the face of the brand, because they're really good at spreadsheets and financial analysis. Right before you came, that's what I was going through. And I'm like, yeah, this looks really good and I need to know what it is on our developments, but let him run it. Like he deals with the banks, the legal docs, the attorneys. I'm on the emails and sometimes like, hey, just pull me off the email. I got 30 of them today. Right. Just show me the oversight of the whole project. Yeah. And so it's funny for me, it's taken years to learn that. Maybe it's because I'm an alpha male and I wanted to control a lot, and as you grow an actual business, not just one partnership, working with one person isn't that hard. Split some duties and go for it, right? But if you're really trying to build something, you kind of need to have the right people in the right seats and have, weekly check-in meetings, which I haven't had in the past. So now I'm implementing that.
Yeah, I love that. I actually recently just hired a money coach, which has been a little fun.
So I have not heard of a money coach.
So I don't know if that's the right term, so to speak.
Okay.
But you were talking about like your vision and your goals. So like, one of my big goals is to have $1 million in a separate account, my wife and I's account, separate from the business, separate from my financial advisor, just $1 million in an account. And so with this person, she helps with my business KPIs to make sure my business KPIs are aligned. She's real estate experience. We meet once a week. We go through all of my KPIs. On every single deal, I'm required to wire a specific amount of money from every single deal into this account that we've built up. So it's been kind of fun. I've never been good at doing that stuff and setting aside money, but the account that we opened, I can't see it. So I just transfer it and it's like, see you later. It's been very insightful for my business because I am obsessed with the marketing side of things, but like from a high level KPI standpoint, knowing if I'm getting a 3X, a 5X, a 2X, or I'm negative, right, on certain things. Sometimes my VAs miss certain things where she's like literally in my bank account, seeing what's going out, seeing what's coming in. So those things have been honestly very eye-opening in certain aspects of the business. And as I've continued to grow of like what's working, what's not working, but it's been fun.
I mean, I think that's really cool. It's almost like a high-level CFO, money strategist. I mean, it's similar to my CFO, but he's not coaching on my plan. But I actually really like that.
So she's a fractional CFO.
There you go. Yeah. But she also is, it's not just, hey, well, let's improve your business and KPIs. It's, hey, this is my personal plan. And they force you to do it.
So I have a personal spreadsheet of like where money goes in certain times, like into my pension, into my stock portfolio, into thing. And now it's become like this automated thing, which is cool to see. Like it makes my wife happy because obviously there's money going in there and she feels safe and secure. Because as you know, this business can change overnight. And so being protected, especially when, we're taking on a lot of risk is important.
Yeah. And it's, we all have losses on the way to wins, right? And it's like you have so many wins in a row. And then I know for me, I have 2 properties, maybe 2 at a loss right now. And they're things outside of my control. And it's like, we were 50% done with a 4-plex remodel and a homeless guy decided to jump the fence, break in and burn one of the buildings down. Oh. You don't have control when the fire department's calling you saying, hey, your house is on fire.
Was there insurance?
Yeah, there was insurance, but insurance always lowballs you, number one. You provide all these receipts, and they still lowballed us because it's, you take what you actually spent, and then because it wasn't a finished product, they don't, they refund you or they get a number based on value or the price, or you should say the cost of rebuilding, right? Mm-hmm. And it's whatever they say. It's not what your contractor bids to build, the lumber and the 2x4. So the number was low that we got back. And we're like, plus now you have holding costs because we had a private money loan. They don't refund any of that. It's just, so I think that they offered us $160,000 and we had already spent $200,000. We had receipts for $200,000. And it took us a year to get our money. Wow. Almost a year. And so what we did was we hired an attorney. There's attorneys out there that they will just take 30% of what they negotiate above and beyond what the insurance will come back with. So you're really it's not costing any money. It's only if they go above and beyond. So we hired them and they got us an extra 50 grand. I think they got 15 of it, but we were okay with that extra 30. But what we did was we had it was too expensive and the numbers didn't make sense to rebuild. So we paid out the investor with their interest. We had one investor in it. That was the right thing to do instead of hold the money and figure it out. So now we're developing the property. We're actually under contract to sell it. So instead of having 4 units, we said, well, it's better use of land to build 3 luxury townhomes. And we've been in that process for a year. Between it just dealing with the city, it's in Houston, which we're familiar with, but dealing with the city is really hard. Just to get a permit to demo the existing fire burnt building took like 4 months and like $12,000. Then the demo was 20 grand. So it's like, guess where I build? I build in the county of Houston now. I don't deal with the city. Permits are 3 to 6 months. Full big commercial buildings. You just less red tape. Yeah. So if somebody sends me a piece of land in the city of Houston, I go, nope, not for us.
Yeah, interesting. I mean, that's why I created buy boxes. Like I won't do stuff that needs like long, big development stuff. I don't want to develop. I don't want to deal with city. I don't want to deal with any of that stuff. Like to me, I like simplicity in my business right now.
Yeah, and it's funny how we all look for something different, but what's great is there's just so many different ways to make money. So it's however you want. For me, I went into development for a couple reasons. My deals are larger than they used to be, a lot larger than they used to be. They take a little bit longer. There's still risk involved, but I also like the projects. And the other thing for me is like there's super low supply of what I build. And very high demand where the market is just shooting up and up and up. But we don't make money for 2 to 3 years.
Sure. Yeah. I mean, you're creating a bigger solution for a bigger payday, right? Yeah. Like we're all in the solution business. It's like the bigger the solution that you have to solve, the bigger the payday is.
Yeah. And I totally agree. And, I think if somebody wants to get started in real estate, would you say that flipping is probably the easiest way, you think? Like if they want to invest in real estate?
I don't think so. I think it depends on like where you're at, right? Like someone getting started in real estate may not have the capital, right? So do you become, a realtor, or do you go work for, a flipper or wholesaler? Like something entry level that takes zero risk and zero cash is wholesaling. The only thing is the cost to acquire a deal or find a deal is very expensive these days. Like you can't just go out and make cold calls and think you're going to get a deal overnight, right? It takes a lot of time and effort. In fact, like I was just on a podcast recently and we were talking about, I see this dude on TikTok and he's like on day 100 of making cold calls every single day and he still hasn't even gotten one deal, right? And to me, that's indicative of this market right now. Like back in the day when I was just getting into real estate, I could make cold calls every day and get a listing or find a buyer or something. Where now, like, it's a volume game. You have to spend money to make money in this business. And so to get started, the barrier of entry is very challenging. And so if you don't have the cash, flipping is probably not the answer. If you have the time, then maybe wholesaling is the answer. So.
Yeah, and I agree with you. And I think, I'm watching the market, especially even here in San Diego, because I live here. I always like to keep an eye on what's going on with the market as I'm building a couple homes on my property. And I just want to know what they're going to be valued at the end. What I invest in now commercially is based on the income it provides, not what my neighbor's house is selling for. And in my market in Oceanside, houses just aren't going for sale. I don't know what you're seeing in the rest of San Diego County, but the market's just not really moving. I think people are holding on that have maybe rates below 4%. There's some houses for sale, but what I'm seeing is there's just not as much movement going on.
Well, there's no demand and there's no supply. Right. Supply has increased over the last few months for sure. But like I have flips sitting right now. like with no offers, or we have constant cancellations. I have a 55 plus that I bought that I'm probably going to lose 10 or 20K on. I think when the 10-year spiked 3 weeks ago, and we've had this stock market fluctuation, this uncertainty in the market with tariffs and other things. Markets don't like that, whether it's stocks or whether it's businesses or whether it's real estate. Like, people are just confused. And so I think it puts people into a holding pattern of making a big decision like selling or buying a house. And that's going to affect people like me. Am I seeing it from a wholesale perspective? Not necessarily. Like, I think, things are moving in certain parts, right? Like, I think finding, your unique edge. Like, when I'm comping out properties, I love properties that have low inventory in certain pockets, right? Things that do have still low market time within the last 90 days, things that there's pending sales in, right? Like the 55 plus that I bought, there's 35 active properties in there. I should have never bought this property, right? But I just thought I got it cheap enough to where I can put it on the market and sell it as is, instead of making a 10K assignment fee, which is what I was going to make. Hindsight's 2020, right? But I have the ability to make those types of decisions and risk. But this market is scary right now. And I would tell you, like 3 weeks ago, I was way more bullish on the market because our trajectory of interest rates were steadily dropping. I was hoping with the higher unemployment numbers that maybe Jerome Powell would do some type of rate decrease, and especially with how the stock market's been reacting. But we're in a political tug of war, and I don't know what it's going to take to get out of it. Thankfully, we have seen rates improve, but it's just like, I don't know what's going to give. I think right now is a little bit more risky than anything else. I think on the flipping side, I'm getting way more conservative on analyzing deals. I'm factoring in a 1% depreciation per month of holding time that I'm buying anything. And then I'm being extremely selective on stuff that I take down.
Yeah, it's smart. And I agree with you. There's a lot of fear in the market. I mean, I've lost 3 investors this week, literally because of fear of the stock market. And we're closing in 2 weeks. And it's like, oh, I have to replace them quickly. Yeah. And it's, people are scared, like you said, to make a decision. And when I relay like, hey, the stock market has no significance on what we're doing specifically, especially because we readjusted the underwriting for what the bank has changed to. And the banker, I called the friend saying, call the banker, hey, I changed my underwriting to what you're offering now. Could it get worse in 4 months when I need the loan? And he's like, no, I don't see it, because now we're being ultra conservative. So I'm redistributing a pitch deck tomorrow. And it's like, hey, here's some more conservative numbers. Didn't really change the investments because of the low supply and the high demand there is more business related. It's not residential. I'm still super confident and bullish only on my product. Like, I'm not going to go buy my vacation house that I want right now. Sure. Like you said, because I thought interest rates were coming down once or twice this year. And, we're in April. It's like, who knows what Jerome Powell's going to do?
Yeah, I mean, I think a lot of wealthy people who are going to invest in your deals or my deals or whoever, they still have money tied up in the stock market. So regardless of whether your deal makes sense, if their portfolio is down 15 to 20% over time, they feel less rich. Right. So they're not willing to take on as much risk because they feel less risk, even though it's not realized gain or loss. Right. So, I think we're also in the area that is, very expensive. We do have a lot of wealthy people who are invested in the stock market. So, is it correlated? I don't know. Do I see rates going down towards the end of the year? Sure. But like, I can also see the opposite happening, right? Like, a lot of things that Trump is doing right now with doing these tariffs and doing what he's doing, right? I think he's kind of forcing a stock market crash to create more job loss in the short term, some more pain, in order for Jerome Powell to react to lower rates, right? Then the U.S. can refinance their debt at a lesser amount, right? Trillions of dollars in savings, if for whatever reason that interest rates, if Jerome Powell does react and interest rates drop. But I think Jerome Powell also knows what he's doing. And so that's why I'm saying this is like a political tug of war. It's who's going to fall first. And I think that any time that we've had in an inflationary market with these higher interest rate environments, the Fed has always been delayed in responding until it's too late, until we've had some type of bigger correction. And so that's my fear right now, is that, especially with the political arena, that they may wait until it's too late, until we've seen more pain in the market than we needed, and they have a delayed reaction to what's happening.
Yeah, I mean, I think you said it really well. They're typically 3 months behind or 3 months too late. And it's like UPS, I saw something yesterday, they're going to lay off 20,000 workers because packages are just not shipping. People are not spending money. My girlfriend was in shipping previously. She's basically retired, working for us, raising the kids now. And she said it was down 30% last year. And it doesn't, some people don't think it affects it. It's like, hold on, if global shipping is down 30%, that's not great for the economy either. It's an indicator, right? And as you see these larger companies start laying off employees, that's a bad thing for the economy, number one. Number two, people don't have money to spend, so they're not going to be buying homes. Realtors are not selling homes. They're getting tighter. Mortgage brokers are having a problem. It's just a trickle-down effect, and I do agree with you. I think there's a total tug of war. I think Trump is not doing anything by accident, Whether you love or hate him, he's a smart guy. It's a business move. Bernie Sanders and Pelosi, they all said, yeah, tariffs years ago, they said, hey, tariffs need to be lowered and adjusted worldwide. And I think that's what he's trying to do.
There's also always been tariffs on the U.S., right? And this is the first time that it's really been publicized that the U.S. is now putting tariffs on other countries. And I don't want to use the word retaliate, right? But we've always had tariffs on us. So the fact that it's now getting publicized more, are the tariffs aggressive? Yeah, of course. Is he trying to bring more jobs into the U.S. by doing the tariffs? Yes. Is it going to work? We don't know, right? But he also did this in his first presidency with doing this kind of trade war thing, which did eventually get us into a bull market. Right now, it's too early to tell whether or not we're going one way. To be honest, if I was to tell you which percentage I'm at in terms of recession or, getting out of this safely, I think I'm more along the lines of a recession. I do think that we've been in some serious pain over the last couple of years, right? Me personally, I haven't been affected, but I know a lot of people that have, right? That can't afford to go get groceries. The gas is more expensive. Was that a part of the previous presidency? Maybe, right? But I don't know. I don't know what's going to happen. I don't think anyone does who tells you. I think right now I'm just trying to be as prepared as possible. I think that was a big reason why I wanted to have $1 million into an account, because I'm trying to prepare for something that does happen later on, so that if I have to create a fund and start buying up every house that's out there like these big hedge funds did, back in 2017 when rates spiked up and they sold them all for billions of dollars, then I'm going to do that.
Yeah, I think it's smart. Even in personal financial education or Dave Ramsey, it's like, hey, pay off your debt and try and have 6 months of at least living expenses and whatnot. When you're someone like us running a business and you're spending a lot of money, it's like, whoa, that's actually, I need a significant amount of money for 6 months to cover all my expenses if you're including business stuff. So I think it's super smart that you have that. I know for me, mine's very fluid, where I'll have a bunch of cash, and then it's like, as soon as I get a deal under contract on the commercial side, the EMDs are a large amount, and then engineering is $100,000, and I like to get that started once I know I'm closing. So right now, it's like I'm closing a park and I'll make $250,000 tomorrow, but my account's pretty low. For me, it's low, and when you have high expenses, you kind of feel poor. Real estate investors, we like to act like we're poor because no, hold on, I got 2 more deals I want to offer on, and that's going to take another $100,000 out of my account, but it's kind of part of the game we play. So I love it that you want a savings that's you cannot touch for business.
Yeah, I think, and that's important, because with me, when I, most of the time I have 20 to 30 deals at one point in time, right? And most of those EMDs are 10,000. And then when I have flips going on too, and then I have marketing expenses and things like that. So it is a lot. It's a very cash intensive business, regardless of what real estate field you're playing in. But that's why I wanted to have the money that I recycle in my business account. That's fine. I can have it there, and I know what it's going to take to keep there. The separate account is literally just for like, hey, this is like, I don't want it to be recycled in my business account.
Yeah, I think it's smart. It's a really cool idea and something I might implement coming soon. I have some personal goals, and I'll tell you what, some of the personal goals kind of shifted my mindset, or the goals changed once I've had some friends of mine that were my age, like die in car accidents and things like that. And I have 2 kids at home. So even though I've been so focused on growing the business to get to a number to like quit my job, at the same time, it's like, well, what happens if something happens to me? Or if I just have a medical issue and I can't fly airplanes anymore? For me, that's where most of my income is coming. And then I spend it on real estate investments that, yes, in 2 or 3 years, I'm going to have nice large chunks of money, but I want to make sure I make it the next 2 or 3 years, or have a plan in place to support my family.
And there's nothing wrong with that, right? Like, I think like when my W-2 job, I was making really good money, and the only reason why I left is because I was able to stack up a significant amount of cash to have as reserves. And at the time, I wasn't spending marketing expenses. I didn't have like a large overhead when I started the business. So, and I scaled it up, I wouldn't say slowly, but like when I slowly scaled it up from where I was at, but I think it's important to know and have proof of concept before you take the next steps, because I wouldn't have if I wasn't making, I don't know, 5x what I was making at my corporate job, maybe even more than that, whatever it was, that year in 2023, I would have never quit my job in 2024.
Yeah. And I agree. I think it's proof of concept is big. So for a lot of investors, I feel like we all want to get out of our day job so that we're working more for ourselves, even though in my opinion, you work harder and longer hours for yourself, but it's more rewarding. I get to control it. But a lot of people are so eager to quit their job early. And I try and advise them like, hey, don't aim too early, because having that W-2 job also helps you get loans and things like that. I know it's helping right now for me. They're looking going, hey, you're a high income earner. And then they look at some partners that really work for themselves and don't have much income. It's all equity. And they're like, okay, this is a little bit challenging. So I'll tell you what, I'm glad that I have a W-2 job, because it does help the business, even though I want to exit long term.
Sure. Yeah, and it's okay. I mean, that's like, I don't know. I think it's totally okay. I honestly, if I was to tell you the truth, after I quit my corporate job in April, I regretted it like 4 months later, and not regretted it because I wasn't making more money. It was just like the money that I was making at the time was so easy that I didn't have to put a lot of time and effort into it, because I had such a big like book of business at the time. And still to this day, I still have clients who still use me and still reach out to me for stuff all the time. And so like theoretically, I could have kept doing it without anyone even knowing that I ever left. I was actually forced out. So the reason why I was forced out is because I started a podcast, and with title insurance, it's highly regulated. It's an insurance industry. So when I was posting content about real estate, flipping houses, making money, wholesaling, all these things, they're like, hey, if you continue to post like that, like you have to be out. And so I stopped posting for a certain period of time before I left. But I could have very easily still been there and collected a paycheck and not had to, quit that job. Would I have now at this point? Absolutely. But like, your first few months, it's a scary, regardless of how much money you're making. Like if you're still making, 5 to 10x what you were making at your corporate job, it was still a weird concept. Mm-hmm. It's still weird, and because to me, it was a safety net. I call it the golden handcuffs, right? Like I had a guaranteed paycheck coming in regardless of like anything.
Especially if it comes easy and you've been in it a while and the checks are coming in and you enjoy it.
401k, stock match, like all these things that like, as now, I have to feed that beast, right? Like I don't have a stock match program.
Yeah. So. Yeah. No such thing in real estate. You got to create it yourself. So I think some people are so eager to walk away from that, where it's like, you should try and juggle both for a bit. I think at least to test the market, make sure you really want to do it. And if your job is really stressful and it's creating health issues and family issues, maybe that's a job you want to get away from. But if it's not a job that's creating that and you enjoy it and it's not that stressful, like maybe try not to walk away at all.
I had so much more. I've finally got to the point where I have freedom now, but I had so much freedom when I was at my corporate job. The only thing that like as we get older into different levels of success in business, I don't want to force relationships anymore, right? I just want them to happen naturally. And when I was in that business, I felt like I had to force so many relationships and let's call it suck up to so many people who I felt like treated me wrong or didn't treat me fairly. Or I was just like, just another person, right? Trying to get their business. So for me now, I feel like I have just like this leather heart for like, relationships now is different. I don't want it to be forced. I want it to be natural. Like, I don't want to have to force a relationship for money, for happiness, for anything else. So it has changed me, which I'm so glad for leaving it, because it's brutal having to every day go to work and not enjoy the people that you're working with.
Yeah, that's
Right.
a big deal. I mean, that's what I mean. Those are the people maybe you should leave a job to an extent, as long as you have the stability in your new business, and, yeah, it's interesting. I didn't know you were forced out. So thanks for sharing that. It's, you got a lot of business experience. It got you into real estate. You made relationships. Even if they were forced, that's probably why you're good and easy at building relationships.
Yeah, now it's different because I control my own destiny with my own marketing stuff. I still get a ton of realtor relationship stuff, which I keep the relationships that I like to have. Like now I just don't force it. Like if it comes naturally and we work together, great. If it doesn't, then, I'm not prospecting for it. But that's why I turned on, like, we all have our unique edge in our business. And for me, my unique edge is direct to seller marketing. Like we figured out our angle, we figured out our data, we know what works, what doesn't work, because I've tested it and I spent $500,000 on testing last year. So like now I don't have to force any relationships for a deal. Yeah. Now I can just, get what comes in and whatever else comes through, it's gravy.
Yeah, that's awesome to hear. I like asking my guests, not just one, but are there like two books? I don't know if you're a reader, I am, but are there two books that really stand out that like made a difference in your business or your mindset?
So I in 2023, I listened, and for the viewers out there, yes, I did not retain a lot of this information because I'm going to say the number and you're going to be like, well, you didn't get anything from it, which is true, but maybe I got like 1% from each book. I listened to 80 audiobooks in 1 year. So I listened for an hour every single morning. I think I was finishing like almost 10 audiobooks a week. Wow. Or a month, excuse me.
Yeah.
And so I've listened to everything. The one that stands out the most is the Dean Graziosi one. And really it was like, there was a few things that, he talked about, just being grateful for the relationships, for the people in your life. That was really important. And then, there's a ton. Like I love Grant Cardone's, books. 10X is easier, than 2X. That was a good one. There's so many books. Like I would just, if someone out there is trying to figure it out and get their head on, like for me, when I did that, I was trying to take it to the next level and I was trying to figure it out. So I'm like, if I'm going to try to figure it out, why not just dive all in? I'm going to listen to all of them, right? Because there's not going to be one that you're going to be able to retain anyways. Like you may as well just listen to everything that you possibly can, retain what makes sense to you as you're listening to it, and then, take it and go. Now, to this day, I haven't listened to an audiobook in a while. I don't listen to a lot of podcasts anymore, just not relative to some of the things that I'm doing, and I don't want to be distracted. I've always had like very high, motivation and things like that. If I need to like figure out an answer for my business, like that's what I have coaches for.
Yeah, and I agree. I read some books, but I definitely find myself more on the audiobook. I like to just get on the treadmill early. I used to do different cardio. Now it's like getting on the treadmill, walking an incline, and just listening to a podcast or an audiobook for 30 to 60 minutes is an awesome way to start the morning. And I agree with you. When I read a book or listen, either way, right? It's you take out what you want to get from the book, and it doesn't need to be the whole book. Yeah. If I listen to the first couple chapters and I get some really solid info, half the time I put it down and then I try and go implement that right away. And sometimes I don't even get back to the rest of the book. And there's nothing, it's not bad. as long as you learn something and you go and implement and it can change your life, I think there's just so much to learn out there.
100%. And I think it makes you think bigger.
I agree with that. Yeah. And it's not just business tactics. It's like, mindset, like 10X is bigger than 2X, right? I haven't read that one, but it's funny because I was talking to somebody, they're like, you might not need to read it. Your mind is already there. Yeah. But it's like, great. Well, the other books help me lead to that as well.
Yeah. I think now too, like we were talking about like masterminds and stuff, those are the places where I get the most. So I went to the boardroom there. They had something at Aviara, and, I'm close with people who are in the boardroom. So I just went to the happy hours 2 days in a row. And then I had dinner with the friends who went that were out of state. And just being around people, I can share revenue numbers with certain people in a room, right? And to some, I may be a big fish. To others, like I'm just a little peon. And to me, I always want to feel like the little fish, because I feel like the potential of getting to where you want to go is still great, because there's so many people who like are way further than I am. And I think it's important to be around those people, because you listen to them, and I just listen the whole time. Like when I'm around people who are doing 10, 15 million in my business, I sit there and I just want to take in everything they're saying.
Yeah, there's just so much to learn too. And what I found is there's definitely everybody in the boardroom is ahead of me, I would say, and I'm okay with that. Sure. It's not, hey, I don't need to be better than any of them. But what I've also found is I also don't want to get to their level, because my vision is more clear and it's lower level. But if I can be more efficient and be more profitable in a shorter amount of time based on their skills or their, losses and gains and their advice, then that's why I joined the room. Right. Not necessarily like, hey, I want to get to where that guy's going, but I also don't want 21 employees. So it's great though, like you said, being around people doing really big things. I do the same thing. I go, hey, I'm a nobody, but I think the problem though that you'll find is that you don't need to have 21 employees to get to where you think you don't want to go, if that makes sense. No, I agree with you.
That's the scary part, right? Like for the listeners, I've only had one employee. Like this year, I've only had one employee to get to where I'm at in terms of, let's call it $4.5 million.
I mean, that's impressive. And that's really cool. It means also that you've been efficient. You're probably efficient with your time.
100%. Yeah. I mean, obviously like with time, I'm still in a place where it's time suck and I'm wearing a lot of hats. But it's possible, like if I wanted to scale to 10 million, and what would that look like, right? Like my one acquisition rep, if she can do 4 million in 1 year, then like bringing on a second person that can get me to 8. Maybe I need one more, employee in terms of staff and like in-house. But to scale bigger doesn't mean more, I don't think, in most cases. And actually in most cases it does, but like I think you can create your business. That's a great thing about business, right? You create your business how you want to create it.
Exactly. And that's something that I'm trying to learn, rather than, hey, hit these goals of assets under management or sales or income. It's like, well, hold on. Well, there's other things with that as well. There you go. And that's the biggest thing. And it's like, so what are before we wrap this up, what are some of your hobbies outside? I see you've been playing a lot of golf, which I told you, I go, hey, let's go. I haven't been playing golf, but it's time to get playing again and have some fun.
So golf is one of those interesting things that I'm terrible. But I had a goal with a buddy to break 90. And so that was like the end of last year. And so I was sandbagging him by taking lessons, and I was going to take lessons every single week, and I've slowly gotten better and better. So now like I'm shooting in the 80s pretty consistently, and it's fun. One, to get out. I feel like there's not a lot of things that I can have hobbies where I can go out for 4 hours and literally not think about work. Like I'm not on my phone. I'm making sure that I have do not disturb on, or I'm putting it in the thing. I don't care what happens. It's not, unless someone dies, like don't call me. But I'm golfing a couple days a week now, and it's been really enjoyable and like getting good at something again. I was always into sports growing up. So like having a hobby, it's been fun, and hanging out with friends. Like I think, I've been golfing with a lot of other investors and, a lot of, people in the real estate space. So being able to collaborate on things like that. It's awesome.
Yeah. And I think it's kind of why I'm getting back into golf. I have business friends who are like, oh, we golf every Friday. And I'm like, I don't have every Friday available, nor do I have 4 hours. And now I'm kind of getting rid and selling the assets that are a pain in my butt to where I'm like, wow, now I actually have some free time. And, so that's why I'm like, hey, let's golf, because I'm going to get back into it with a bunch of friends. And you're right. And you get to not just go golf and stress out and try and be the best scorer. Like, I'm not a good golfer either. I'll be stoked to break 100, but it's something like, hey, maybe I try and go golf once a week and just talk business, period, you know?
Or not, where it's a time to decompress. And one of the things, I've actually been golfing like the first tee time out. So like 6 a.m. some days, to where I'll go golf and I can be back in the office by 10:30.
Yeah, that's a great use of your morning. Where like right now I'm using it for the gym, but it's hard to do that 7 days a week. Maybe I do it 4 or 5 and then golf in the morning. Especially like, I know for me, getting up earlier has definitely changed my life.
Yeah. I've always been a very early, like, 5 o'clock is kind of like my normal time. And I am a very avid gym goer. But I have just gotten obsessed with golf, like something that's been fun doing it. So, yeah.
Yeah, it's cool. I can't wait to go play Cabo and Palm Springs and Scottsdale. And
I played 3 times in Cabo when I was just there this past weekend. I played by myself. Like, I just went out, played golf, played 18 holes every single day. First tee time out, came back to the hotel with the wife, hung out by the pool, drank some margaritas, and like did our
vacation
dinner.
right there.
Yeah. Took a little nap in the afternoon. I was good to go.
Yeah. Yeah, I'm a big fan of Cabo. We just took the family down there in March, and we went to Hawaii in January. It's like 6-hour flight with 2 kids. It's hard. It's fun once you get there. Yeah. And then we did the Tijuana to Cabo, 45-minute flight, super easy with kids. Yeah. I have a driver I've been using for years. Mm-hmm. He shows up with beers in the cooler in a Suburban with car seats. Right. And my girlfriend went, okay, yeah, this is pretty easy. I go, we can come for 4 or 5 days. Right. We don't need to do like this 8-day Hawaii trip.
Right.
I'll still do Hawaii every year, but I'm like, we could do Cabo twice a year, 3 times a year.
Right.
You know, so I'm a big fan of Cabo.
Yeah, I love it out there.
Can't wait to get back. But hey, well, we'll wrap it up. Well, thanks so much for coming on, man. It's always fun chatting with you. And, because I'm not in the flipping industry anymore, it's so cool seeing you be really successful and really like lasered in, which I mean, I can respect that because I'm lasered in on my asset class. But thanks for sharing, and can't wait to connect more. We'll have to hit the gym in here and shoot some content and have some fun.
Yeah, appreciate it.
All right, well, thanks for joining us. Hope you guys learned some stuff from Josh and we inspired you. Get out there, listen to some audiobooks, and we'll see you on the next show.